What is going on, everybody? Welcome into another edition of the Daily Energy News Beat Stand-Up here on this gorgeous Monday, February 27th, 2023. As always, I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. My man, how we doing today?
It's a beautiful day in the neighborhood down here in Dallas. It's a great Sunday when we're filming this.
It really is. I'm back from sabbatical, so I appreciate everybody tolerating Stu. Hopefully our numbers will continue to improve. With my lovely presence back. I was joking with somebody at work today. I was or on Friday. I'm on sabbatical, much like Aaron Rodgers is in that dark room. Did you hear about that?
No, I didn't.
Room that he's in. Apparently he went. This is the quarterback of the Packers, apparently, to decide whether or not he wants to play football for $50 million. Okay, so remember the decision he's making.
Right.
Make no money or make $50 million being the quarterback of the Packers. So remember, that's the decision. Right. And in order to make that decision, he goes to some darkness retreat. You're in a 300 by 300 square foot room with a bed, no lights, it's called a darkness retreat. And basically it's like 3 days of you're supposed to experience darkness. So I was actually in the shack next to him. It was fun.
You know what? Experiencing darkness means a lot to different people. So, you know,
it's a little weird. It's a little weird. He's got to go to a darkness retreat to figure out if he wants to make $50 million. I mean, I'll help you make that decision. I'll do it for half.
Yeah, there you go. I got nothing on that. I don't want to have anything to do with darkness.
Luckily, the stories that we have are excellent today, Stu. You've done a great job this weekend of keeping up. There's a lot that has happened this weekend, to be honest. Normally, it's a little bit dull on the weekends, but we had some really hot Friday news in the M&A space, which we will cover. But here's a quick rundown of the stories we've got today. First, the U.S. had billions for wind and solar project. Good luck plugging them in. This is actually out of the New York Times. It'll be fascinating to hear what they say, because you're right. We've allocated billions to wind and solar, but it'll be interesting to see how they're able to actually get connected to the grid. The next story that we have is in 2022, power plant emissions fell on the switch from coal to gas. That's according to the EPA. Going green, Stu, as we like to say. Natural gas is clearly being now shifted and becoming widely recognized as the clean fuel that it is. So we'll dive into what the EPA said in that report. Next, we have why California natural gas prices were almost 6 times higher than other parts of the U.S. I mean, it's absolutely insane. If you're out there in California, I would be outraged. We'll dive into why it's 6 times higher, really. Next up, electrical prices surged 14.3% in 2022, double overall inflation, according to a new U.S. report. I mean, energy inflation hurts everybody, not just and especially the disproportionately impacted communities, as Stu talks about so often. Next, we have America's largest power grid facing worsening reliability risks. That's the PJM interconnection, which includes New Jersey, Massachusetts, a little bit of New York and Manhattan, but mainly Ohio, West Virginia, mainland Virginia, Washington, D.C., and parts of Kentucky. So the grid is absolutely horrible. Stu will cover what's all going on in that sector. He'll throw it over to me. We'll lightly cover what's going on in the crude oil and natural gas markets. Natural gas, actually, some bright news on Friday. And then we will talk about the M&A deal, or the potential M&A deal between Pioneer and Range Resources. I know Stu and I have a lot of thoughts and can I want to get into a little bit of the psychology of how this stuff leaked out. So we will get you that story and then get you out of here bright and early on this Monday. We appreciate you for checking us out. Before we dive in to today's show, though, again, check us out. World's greatest website, www.energynewsbeat.com. dashboard.energynewsbeat.com, the best place for all of your energy news. Stu does a great job of curating that. Check us out, dashboard.energynewsbeat.com. It's our combo data and news together. We're hard at work at V2, so it's a little slower than expected, but that's technology, folks. Check us out, www.energynewsbeat.com. I'm out of breath, Stu. Where would you like to be?
Oh, I couldn't be so fortunate that you're out of breath. The U.S. has billions for wind and solar in projects. Good luck plugging them in. This is a pretty cool article from, like you said, from the New York Times. There's a couple big things that has happened around the world there, and this one is really sparking it. And there are more than 8,100 energy projects. The vast majority of them are wind, solar, and batteries. Our friends over there at Fry Battery out of Norway are coming in to take care of this as well, too. But here's the problem. This is from our perspective. The interconnection process has become the number one project killer, said Piper Miller, Vice President of Market Development at Pine Gate Renewables, a major solar power and battery developer. Michael, it's a brain trust issue as well. Two things really that are in this article. The EU is having to print money to catch up, because now the brain trust, just like Fry Energy coming across the pond, is now taking up a lot of those dollars, and they're having to create the same thing to attract people to go to Europe. The brain trust, people are fighting for these project engineers, Michael. You can't get people approved to work on all of these projects, wind, solar. The supply chains are not there. You may have the money, you may not get it done. It's gonna.
I mean, think about this. I mean, it's just that PJM interconnection, the one that stretches all the way from Illinois to New Jersey, that will actually, I think we should probably cover next,
right?
Because it fits right in. But think about this: they've announced a freeze on new applications until 2026, so it can work through the already backlog of thousands of proposals, mostly for renewable energy. So
exactly,
that's the interesting part. Is it's not just about, hey, can we build and spin up a wind farm? It's where does the actual electricity tie into the grid? You've been on it for years, Stu. Don't hurt yourself patting yourself on the back.
But here's the thing, like Meredith Angwin, who shortened the grid, she brought up, and David Blackman just talked about this in their podcast as well, too. The grid, and then I talked about it with Don Deers in my podcast. You have to add 180% when you bring in wind or solar for additional uptime guarantee instead of the normal 20%. So it is just nuts on this, Michael.
Think about this. I love halfway down the article, it's one of the bigger titles, says, imagine if we paid for highways this way. A potentially bigger problem for solar and wind, and that is in many places around the country, the local grid is clogged, unable to absorb more power. That means that if a developer wants to build a new wind farm, it may not just have to pay for a simple connecting line, but also for deeper upgrades elsewhere. Get this, Stu. These costs can be unpredictable. In 2018, EPD North America, renewable energy developer, proposed a 100-megawatt wind farm in southwestern Minnesota, estimated it would have to spend $10 million to connect it to the grid. But after the grid completed its analysis, EDP learned upgrades would likely cost upwards of $80 million, and it canceled the project. You know what this does, Stu? It creates a whole new problem. When proposed energy projects drop out of the queue, the grid operator often has to redo the studies for other pending projects and ship costs to other developers, which can trigger more cancellations and delays. Dun, dun, dun. It's
and there's about 6 things you said in there, Michael. There's 6 things. I mean, the number one that I just said a second ago was there's a brain trust missing from these people that can go through and analyze power, physics, and everything else. That's the number one job. It used to be IT folks. No, it's brain trust for energy, trying to get things on the grid. Let's go to the next one here. Great points, Michael. You did good.
I think we should go America's largest power. I think we better stick with the PGM interconnection here.
Oh, that's where I'm trying to read it. America's largest power grid faces worsening reliability risks. This one, Michael, you and I have talked about this for a long time. PGM Interconnect established a new study Friday that examines the alarming trend of state and federal decarbonization policies, meaning present increasing reliability risks during the transition due to potential mismatch between resource requirements. Here's the key outlines. Thermal generators are retiring at a rapid pace due to government and private sector policies. The retirements are risking of outpacing the construction of new resources. The report warned, quote, Michael, for the first time in recent history, PGM could face decreasing reserve margins should these trends continue. Those reserve margins is what I'm talking about, that you normally have 20% and you have to add 180 in order to do a renewable. This is nuts. The energy transition is going to be brutal.
Yeah, I think it's interesting considering that they can't even evaluate these studies quick enough, and we're retiring fossil fuel or natural gas or coal plants, which have their issues,
Right.
but we're retiring stable, what we would call baseload energy,
Right.
and trying to replace it with something that we can't even study properly.
Exactly. And so the money has, I mean, which came first? Congressional printing of money or being able to install these things?
It's a chicken or the egg.
That's right. You know, okay. So let's
I
go
think the printing of the money came first, but
yeah. And then that makes inflation happen because of graft. Okay. So let's go to the next one.
inflation.
US 2022 power plant emissions fell on switch from coal to gas from the EPA. Michael, this is very, very important. The EPA in the third paragraph down says emissions of smog components from nitrogen oxide and sulfur dioxide last year dropped 4 and 10% respectively compared to 2021. Emissions of mercury, neurotoxin, which can accumulate in the environment and some kinds of fish, fell 3%. This is huge, Michael.
Yep.
And you know why? Natural gas. Hey, let's boom everything we can and go to natural gas. I'm all good.
Yeah. Again, you were on this at COP 26. You had this. They flipped that out in COP 26 and said natural gas will be clean. You know, they're not outright saying in the press release natural gas is why we're down and emissions are cut, but they're alluding to it. They're not saying it was wind and solar. They're just saying we got rid of coal. Well, what'd you replace it with? It wasn't any of this stuff that's in the it wasn't any of the projects in the PJM interconnection. Trust me, they're 4 years out. They ain't coming onto the grid. So it's the sleight of hand that they're doing and are in the process of doing is, for us, obvious. Hopefully it's obvious for you guys as well. But they'll realize eventually. I mean, they can't deny, our work is far from done, but the data proves we're on the right track. That's a quote from the EPA administrator. Ooh.
Yeah. Ooh, the data proves we're not knuckleheads. So
they're actually looking at data, at least, though. That makes me
Yeah.
feel a little bit more comfortable that they're at least looking at data and they're not outright denying it.
You mean they got Band-Aids on their servers that they had problems with last year?
That's the IEA. We're talking about the EPA. A little different, but yes.
They use the same servers. They're all interrelated. All right, here we go. Let's go around the corner here. In Arkansas, they're interrelated. Is that the new term?
Yeah.
All right. Why are Californians' natural gas prices almost 6 times higher than the other parts of the U.S.? This to me just cracked me up. This was a local news, and the video is on here, Michael. And this guy did a great job saying about the whole thing, about how California is trying to isolate itself from fossil fuels. And it's our beloved hairmonger. I mean, Governor Newsom is just destroying the energy policies. They have to bring in natural gas from Canada, and then they import it in. Let me cover a couple stats in this article, Michael. At Mark Zimmons' Morgana home, his bill just ignited change. When I got the bill, I was a little alarmed, so I started turning down the thermostat using less gas. December's PG&E bill was $575. Of that, $400 was for gas. Siemens furnace got a new setting. That's a lot of money just for gas. That's not your electricity. That's your gas.
It's pretty unbelievable. I mean, to give you an idea, I think, you know, Texas probably, because they're a deregulated market, I'm fairly sure has some of the higher electrical costs relative to other
Right.
parts of the country. I'm only paying like $200. Granted,
Yeah.
I'm a little bougie here. I keep the AC on. I like it chilly. I like it chilly, Stu.
Well, you got a fur
That's how I
coat
like
always
it.
around. So, but when you sit back and kind of, but my Dallas house is same thing, couple $100. My place is up in Oklahoma, couple $100 to run all of them. So I mean, it's like
Well, yes, because you're hooked up to hydro there. I mean,
oh
it would be the perfect place for a Bitcoin mine.
and propane. Yeah. So
Ooh.
yeah, love me some propane, especially at these prices. So
Yeah, no kidding.
Anyway, I just, all of these stories go together. Now, this other story rolls in together, Michael. This is my last story for this section. Electricity prices surged 14.3% in 2022, double overall inflation. Oh, but inflation's transitory. Excuse me, US report. And so the dive goes in. Consumers paid 14.3 more for electricity, double than the 6.5 increase according to consumer price increase. And if the hyperlink in here is amazing on the consumer price index summary. Food, it goes through the whole thing: food at home, food away, energy commodities, and the how much inflation rate, shelter. It's just amazing. And energy is just kicking the bahunkus out of all this.
Yeah, I love this. I love this quote from Tyson Slocum, director of Public Citizens Energy Program. Said domestic energy prices are, quote, tethered to global calamities. Okay, so you clearly know what side of the aisle he falls into, because he's blaming the entire crisis on the Ukraine Russia war, which we know is not. Let's second order theory. But look what he said. This is what I love, Stu.
Yeah,
he also said this: the Inflation Reduction Act is expected to help fund energy investments, but, quote, it's still heavily tax incentive focused, he said, which puts it out of reach for many consumers. Oh, so even the people that should love the Inflation Reduction Act understand that it's just massive tax cuts for large corporations to go, quote unquote, develop renewable projects, which are gonna sit for 5 to 10 years in the queue in the PGM interconnection, because we don't have anybody who can do the environmental impact studies to get them done. They're insane, Stu. It's the definition of insanity is doing the same thing over and over and over again and expecting a different result.
Oh, and what happened to the EVs when President Biden went ahead and put in and said, hey, we're going to make sure that in the Inflation Reduction Act is a lot of the tax credits for EVs. Well, everybody raised their price, almost the dollar amount that the tax deduction was. Guess who gets to pay the bill again? The consumer. So, all right. Disproportionately impacted communities and the consumers. All right, let's go. I'm done, man. I'm wiped out. I've got to go back to the gym, just get my heart.
Yeah. Interesting. It's just another random quote. The EIA expects retail electricity sales will decline due to a milder summer this year compared to 2022 and about 10% fewer cooling degree days. I'm going to go on a limb and disagree with them. I
am too. Have you ever known a weatherman to be, or weather person, or them to be correct?
And I just don't trust the EIA. So I think what they're doing is trying to shill for
you,
we're going to use less electricity.
My young apprentice has grown up. I am so proud of you.
Yeah, okay, but do I think they're messing with the servers? We can get into that whole conspiracy later. I don't think they're looking at the data.
All right, you've convinced me. I think it was incompetence. I agree.
Don't attribute malintent, which you can't just attribute it to pure stupidity. I remember learning that early on in my career, and I thought that was smart, because they're probably just idiots. That's easier to comprehend than there's massive conspiracy.
That's the third time you've convinced me.
Now, I'm with you on Nord Stream. according to our random dude on Substack.
I
I'm dying.
had a great talk with Tom Kirkman. That'll be coming around.
It'll be a good one. Is it over to me now in finance?
It's all you, baby.
I mean, we'll keep it fairly short because there's just we have to talk about the Pioneer news. But first, oil prices currently trading 76.45. It's been a few days actually, again, since I've been on the show. So actually we load out at about $74 over on the 22nd. We've seen a pretty steady 2-day rise. Though I expect things to be fairly mild this week. Again, people are expecting, U.S. economic numbers to come in not quite as strong as we would have hoped. I think that's what's lagging prices down. I know Russia, oil flows are beginning to decrease, and our appetite and demand is still there. So it'll be interesting to see how that balance plays out. As far as where oil prices could go this week, I mean, again, I think we're range bound somewhere between 74 and 80. I think we'll see 80 occasionally. I think we'll see 70, 72 occasionally, but I think we're range bound somewhere between 74 and $78. And quite frankly, you should be able to make money there. If you're an oil and gas producer and you're sad about that, like, go home. Like, your assets should be good enough to make money at 75. If they're not, I'm sorry, they're just not great assets. Now, moving over to natural gas, we're at 250.
Yep.
If you're, and some regional spot prices are a little bit lower than that. I mean, if you're in West Texas, you're somewhere in that, 1 to 150 range. Appalachia is even seeing less than $1 because of all the amount of transportation issues they have up there. So, is your stuff economical there? No, not really. Like, I'm with you. Like, those wells aren't making that much money. I did see, Stu, natural gas well get permitted in Oklahoma, 4-mile long lateral. $26 million, rumor, AFE. Yeah.
What field? The Anadarko?
I don't know. I just saw it on Twitter, and there was a new 4-mile long lateral.
Wow.
I doubt that thing's going to get drilled right now. Not at these prices. Do the math on that. Those prices ain't going to work.
No, I was going to say, it depends on what field it's in, scoop, scap, scoop or stack.
I just want to hear you say scoop stack again.
No, poop stack.
I don't know. I know it was Oklahoma. I think it was Woodford. I think it was Woodford Field. I think it was a Woodford.
I believe that's a scoop stack.
I don't know. No one really uses the scoop stack terms anymore. FYI, Stu.
It just shows you my age.
It does. Oh, the wise one.
Yeah, I came in on the covered wagon when the Sooners.
You did. I'm reading a new book on the Mayflower. I had no idea you were on the Mayflower.
I was.
You captained it.
No, I was.
Who was the one at Plymouth Rock?
No, I was the slacky or first mate or something. Yeah, that was it.
All right. Natural gas, as I mentioned, $2.58. It looks like it's going to be a little bit of a cold front moving in. I think it's why you're seeing prices rise. Inventories did not quite come in as expected. Inventories are well above what their average is. Again, we saw a weaker draw than expected. So overall, I think there is ample supply out there. So again, do I think we're going to see $3 in a week? Not really. But I think with the rollover from winter, as we get closer and closer to what I would call the spring rollover, where we go to injection, I mean, things could get even nastier, Stu. I mean, we could hit a real big slump in the summer with natural gas prices, and it'll be pretty interesting to see how low this thing can go. I mean, do we see $1.50 this summer? I don't know.
Well, I did say when it gets to $1.50, that's my strike price.
That's when you're buying?
No, everything I got, which ain't much.
Put on. All right. Speaking of low natural gas prices, Stu,
Yeah.
this is a fun story. Okay, so Friday morning hits. We don't record the show anyway because we actually record Sunday through Thursday. Just a little inside baseball tip for all you. If you've made it this far, you're a true fan. So we'll get you a little inside baseball. We'll wake up Friday morning to news. Pioneer Natural Resources considers buying Range Resources Corporation. My, oh my. Here we go. Here's the title of the art. That's the title of the article. Pioneer Natural Resource Corporation, one of the largest independent U.S. oil producers, is considering an acquisition of Appalachian natural gas producer Range Resources Corporation, according to people familiar with the matter. Texas-based Pioneer is weighing a deal for its smaller U.S. rival as it seeks further consolidation in the shale industry, the people said, asking not to be identified, discussing confidential information. Deliberations are ongoing, and there's no certainty the companies will reach an agreement, people said. I think this is hilarious. I think there's so much to do on this. Pioneer Natural Resources. Read this. A Texas-based oil company is considering buying an Appalachian natural gas producer. That's not good, Stu, in my opinion. And I don't mean not good. I think it's an interesting combination that provides little to no value to Pioneer and all the upside of cashing out to Range Resources. So here's my thing. When you attempt to acquire any business, there's a few things you need to agree upon or that need to work in your favor, or you need to feel like you feel good about. One is the value. You don't want to feel like you're overpaying for anything. Now, you can never overpay for great. Someone like Pioneer, if they were to offer themselves up to Chevron, they are great. There's no, you 20, 30, 40%, you can't overpay for great. There are certain companies that we really like that if they were to offer themselves in an M&A deal, the value that they would get far exceeds their market cap because they're great.
Right.
You can always overpay for good, though. You can always overpay for good.
Right.
Okay.
That's what my wife said about me.
But you can underpay for good. You can feel like this company isn't perfect, but I'm getting good value. So you have to feel good about the value. Okay. Whether or not you're buying great, good, bad, whatever. Second is hopefully there's some, what I would call economies of scale. There is some sort of advantage that you can achieve from a business side that will allow you to achieve a return greater than the value at which you're valuing it at. Let's say you're going to buy something for $1 billion. Well, you better hope that at some point this acquisition will generate you $1 billion. And having economies of scale, some, contiguous business, something that you do that when adding this company's resources into your portfolio allows you to lower your operating expense or allows you to operate more efficiently. And, we could make up any sort of, but, I think most people are familiar with the term of economies of scale, making it easier for you to lower your costs and make more money. And then third, is some operational knowledge or some, again, I think it just comes back to economies of scale. But the other thing you'd look at is do you know anything about this business? Stu, like, you have a business. If you were to go out and buy a business, you wouldn't go out and buy I'm trying to think. You wouldn't go buy a Subway franchise. Sure, a Subway franchise could be valuable, but time out. I'm making an example. Time out. What experience your only experience would be, I ran a business before. I know enough about accounting so that I'm not getting scammed by my accountant. I know enough about, revenues and, cost of goods and, hey, I'm sourcing my ham from this spot. I should probably go over here to get a little bit of a deal. But at the end of the day, you don't know the dynamics of the sandwich business. You don't know the dynamics of the franchise business and how the individual royalties that each of the different franchises takes and blah, blah, blah. You get down to a rabbit hole. And eventually it's like, well, I'm just a good business owner. So the real question is, do good business owners, can they just buy businesses and learn them? So I say all that to say, you go over that criteria of acquiring a business. This doesn't check. Pioneer buying Range checks none of those boxes. The value, who knows what the value is? The value might be the only thing they agree upon because of these low natural gas prices, and they're lower in Appalachia. So let's assume they've agreed upon the value. They're at the same value juncture. They both feel like there's good value. Well, number two, where's the economies of scale? Pioneer is consolidated, and they literally in the article, Texas-based Pioneer is weighing a deal for its smaller U.S. rival as it seeks further consolidation in the shale industry. What? I didn't know the shale industry was in Appalachia. I thought that was the gas fields. I mean, yes, it's shale gas, but that's not. But when you say shale, you're talking about West Texas, baby. Like this is from Reuters, or I don't know who this is from, but this is some Bloomberg. This is some energy reporter that doesn't really know what he's talking about. He just knows that that the term shale is hot. He knows it's hot. So what he's talking about is the West Texas Midland Basin, baby.
It's
prime
different.
acreage,
Right.
$10,000-$15,000 an acre. That's not what is going on in Appalachia. That's a whole new market. There's legit trees you have to worry about. You have to pay to get rid of trees. I mean, so the economies of scale aren't there. There's nothing that Range owns that's going to help Pioneer produce its West Texas assets better. And there's nothing that Pioneer owns that will make producing Appalachia natural gas or Range resources better, besides more people, besides more layers of management, besides now instead of 3 people you have to report to, it's 5. That's what it'll become. It's going to become more of just a corporate nightmare because, again, Pioneer's attempting to acquire Range. So there's no economies of scale and there's zero operational knowledge to try to tell me that, we can go over and produce natural gas. Yeah, I doubt it. I think the dynamics are completely different,
Right.
So the only thing that looks cool is that you'd be the sixth largest oil and gas producer by volume. If you acquired Range, you'd be the 6th company over 1 million BOE a day. So maybe there's that. It's a little bit of an ego play. Scott Sheffield likes to make a deal. So that I'm done with my monologue, but this deal makes no sense to me, and I'm very interested in why this was leaked.
I think you are dead on right on many of those things, but let me tell you why I would look at a strategic versus tactical. And what you're describing is tactical by saying that everything that Pioneer needs is going to augment it immediately off of it. But from a strategic, the Appalachia play is fantastic if a couple things happen. So you are right in your analysis. But with my conversation with the CEO of CNX, Nick, he did say that there are some things coming around the corner that they're working on, and he publicly can talk about compressed natural gas as well as LNG from the wellheads in the Appalachia because of the price. There's no pipelines going on up in that area.
Exactly.
So hang on. So compressed natural gas at the wellhead does make sense for everything else. I mean, there is a tremendous surge for this. So yes, you are right from a tactical, but from a strategic, it makes sense. So that you would, if I was looking at like Warren Buffett, I'd strip out all the middle management and go for the long-term strategic play. Warren Buffett went for the long-term strategic play with Oxy and
oil
carbon capture.
I don't. I'm hard pressed to believe Warren Buffett's got his money back already. And how did he get his money back? Because oil went to $100.
But let's go pull some of the articles. He said he's in it for the $1 trillion business that's carbon capture. So those people are thinking strategic rather than tactical. And I agree in the short run with your tactical, by the way. I'm just trying to give you an offset.
I mean, you're right. I'm not even sure if it's a strategic move. I think it's a ego move. I'm on my, remember, he wasn't the CEO of Pioneer, has come back in recently as the CEO and taken out Parsley, which his son owned. Obviously they didn't talk about it. It was all above board.
Okay.
Obviously. They never talked about it at Thanksgiving. Never once came up.
Strategic, ego. Stratego was a game that I used to play when I was a kid. Yeah. So Stratego is not a bad game that was comparable to chess.
I am just, I don't get this. And I think this also brings up another interesting, note is who leaked this? There's 4 parties that could have leaked this. There's Pioneer. There's whoever Pioneer hired to do their investment banker analysis. I don't know who they hire, who they work with. Range Resources, whoever Range Resources hired at a bank. I'm going to eliminate the bank because the banks, this is their job, is to be involved in potential M&A deals. And if they talk, they lose credibility.
Oh, yeah.
Because within those 4 parties I talked about, Stu, they know who leaked this. Like it's known. The CEO, Scott Sheffield knows who leaked this. He either ordered it by his IR team He
Where's
called them up. Go ahead.
where's Paul Pelosi or Nancy Pelosi if they were leaking it?
I don't know. Or Range Resources CEO knows who. They all know who leaked it. And my opinion is this: this was leaked by Pioneer in order to gauge market interest on what this will look, because they understand it's a little bit of an out. It's a little bit of an out there. You may be right. Maybe it's a long-term strategic move. Scott Sheffield's sitting there and saying, "No, we could get into the Appalachian gas markets at these prices. They're willing to sell at a valuation that we really like. That with add another dollar to the strip price, and all of a sudden this is a 4x. We project a 4x return in 10. I don't know what their financial model looks like, but that could be a very strategic think. That's where it probably is. So you're probably right on that point. So what do? They leak it. And what happens? Stock goes down. Stock drops 4 percentage points on Friday. Range Resources stock up 22 percentage points. What does that mean? That tells you the market on its face doesn't like the deal for Pioneer and loves it for Range. The question is why? Well, Range Resources is not even the premier operator out in Appalachia. You've got two companies. You mentioned one, Nick, what's his last name? Dirillios?
Dialis.
Nick Dialis. So that's his book?
That's his book. Even got me a signed copy.
He's the president CEO of CNX. They're probably number 2 out there. But number 1's EQT. Rice Brothers, we know that. Okay? I mean, they're not even, they're the third, I mean, they're number 3. That's still big, but they're not even the big dog. So again, my question becomes why? I think Pioneer leaked this. And then when they saw their stock go down, they have to release a press release. And this is hilarious. This comes Friday night. It's one sentence. Pioneer Natural Resources Company today announced that the company is not contemplating a significant business combination or other acquisition transaction. Literally, that's the press release. I could have written that. I know a company that could have written that even. They do okay work.
Maybe.
But you know what I mean, Stu? This probably was leaked by them. This is a hilarious press release. I find this whole conversation hilarious because they probably are talking about it, and probably somebody and so what this press release tells me is that one of two things. One, this was ordered from above to test market interest, or this was just literally something that's getting tossed around inside Pioneer. Somebody, Project Veritas style, or, got a little too friendly with somebody who maybe they shouldn't have, and just was like, oh yeah, we're trying to buy Range, and boom, next thing they know, it's in an article and they're getting the handcuffs on them. So there's two options. Oops. I think it was a strategic leak in order to gauge market interest. They can overcome a 4% drop in the stock price, but that tells you what everybody feels about that combination versus, hey, we're just going to make this decision and see what happens, a la Oxy buying Anadarko. When they found out real quickly that the street didn't like that deal and took $100 oil to really turn that around. So that's, I think, one of the more this is one of the more fascinating stories in the oil and gas rumor mill space that has happened. And I'm interested to know your guys' thoughts. If you have any, let us know. Questions at energynewsbeat.com. We have an email spun up. Hit us.
Yes, questions or fill out any of the forms. We're notified immediately on energynewsbeat.com.
Yes, sir. What else we got, Stu? That's all I have.
Well, there's some more sanctions that are coming around the corner. And you know me, I love some good sanctions. They're going to sanction the more on private people in Russia. And then they are going to continue ratcheting up not only on diesel and downstream products from Russia. They're going to also increase again on nuclear. Russia has 50% of the enriched uranium around the world. And so not only are they going to mess up the oil markets, they're going to go after the nuclear market.
Fun. Woo, fun.
Yeah.
But with that fun stuff, guys, we appreciate you tuning in with us today. We'll let you get out of here, get back to work, start your Monday. We hope it's a quick one. And sorry for all the Range Resources folks that if this merger actually does go through, you'll have now 9 bosses. So have fun. Hopefully you only have to deal with just a couple today.
We'll be hungry.
Appreciate it, guys. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow.